It is in many ways why I think that Bitcoin continues to stand. I mean, it remains number one in the crypto space, despite every innovation that's ever happened, every NFT, every DeFi, every coin, every token. It remains unbeaten. And the reason for that is its true neutrality as a reserve asset. It's that scarce hard cap, and it's the fact that it is nobody's liability. It's not evolving, it doesn't have to change, all it has to do is survive.
Welcome back to another monthly edition of the Collective Shift on-chain analysis with our expert Checkmate. Checkmate, how are you?
Good, mate. Great to be here again.
Thank you for tuning in from Mexico. Now, we're not going to screw around this time. We've got lots to talk about. We've got world wars. We've got governments trying to ban crypto, bank accounts being frozen. It's all happening. So let's get into it, mate. What are you seeing?
Yeah, it's interesting stuff, and strangely enough, I was writing the update. So yesterday's update was on macro assets, right? And I've been looking at four in particular: oil, gold, Bitcoin, and the bond market. And I cannot recommend highly enough literally everything that Luke Gromen has ever typed on the keyboard or said into a mic. That man is so on point with these things, and he's just got a really good view on what all the things you just mentioned, right? Whether it's Canada freezing their citizens' bank accounts, whether it's nation states freezing Russia's bank accounts. And, it's important to put any politics aside from this, because what we're seeing is not your keys, not your coins play out at a sovereign state level, whether it is the Canadian government to their people or the West suddenly doing that to Russia. Now, we've seen the knock-on effects of this, right? We've already been in an inflationary regime. We've seen oil now above $110, not even $100, $110. That has far and wide-reaching implications. Gold looks like it's finally ready for Peter Schiff to do his dance, and Bitcoin looks like it wants to do an even faster run. And I think what Luke Gromen really is capturing in all of this is we are seeing, think about if you're Russia or China. How could you ever trust a United States Treasury again? Because it can be taken away from you. How, as a citizen in Canada, how could you ever trust that your bank account is safe? And it doesn't matter what side of the political aisle you're on, reverse the government, and suddenly you're on the wrong side of the fence. So it's a not your keys, not your coins moment. And the world, and particularly the West, who've never had to deal with this before, have suddenly seen something that they didn't think was possible. And here it is. So it's definitely shaken things up, and we are in a new macro regime.
It's actually madness. It's shocking to start off, sort of this year to see how it played out. And I think last year the crypto markets wiped out, I think it was a couple $100 billion in a matter of, a couple of hours. But to have that all come back, I think we had our biggest, I don't know if it's a daily candle or weekly candle since February 2020. And I think I saw the ruble Bitcoin pair in Russia, like people are panicking. I saw a bank, one of the biggest banks in Russia was actually down 95% on the London Stock Exchange. Wasn't it? Yeah, everyone's taking their money and buying Bitcoin. It's which I got my Bitcoin shirt on today because it really, I think it's doing exactly what it's built for. Well, one of the reasons why it's built for, right?
Yeah, and it's very interesting because, the reason I've got the week on chain, I covered this in one of the videos the other day, and just trying to explore what really happened over the last little period of time. And the thing that, these two charts in particular, this is looking at the supply dynamics, so whereabouts in the pricing regime, how much Bitcoin is in each level. And as I was kind of mapping this out, this was the previous sell-off we had back in May, and you can see very, very top-heavy. This is speculation. This is Elon candles. This is a bunch of people buying the top. We saw loads of them just get flushed out, right? And in our current cycle, you can see this is much smaller, and we only really flushed out the tippity top buyers. We still have this really nice and uniform pattern. And with everything that's happening in the world, when you think about it, kinetic war has to be a catalyst for anyone who's just sitting there being like, oh, I'm not sure anymore. I'm not sure about this Bitcoin thing. That is the sign to just get out. And yet they didn't get out, right? We had people who bought the absolute top, which you can kind of expect, but it's so localized to top buyers. It's just pure panic. And the degree to which people have actually stepped in and bought that dip is truly quite remarkable. And if I just jump back to this guy here, now that we have some price action to the upside, you can see how much of that supply has now returned back into profit, whether it's on entities or a supply basis. So, in many ways, and this has kind of been my thesis over the last month, In many ways, the hodlers are just completely unfazed. And they're very, very different to what we saw back in May last year. Everyone panicked, everyone exited. Here, with all of the headwinds you can imagine, everyone's just sitting tight. And that to me is just pure signal.
Yeah, I think we were catching up last month and we were seeing, because in November we topped out at whatever it was, 55, 60,000. And the people that were selling were those people that were the short-term holders. The people that were buying and holding were the people, the OGs, the institutions. The transaction volume of the purchases was massive and covered 75% of the market. Who are we seeing buy now, Checkmate? Are we seeing the retail start to come back now that things have? It just happens time and time again, right? They panic, they sell. With price moving back, do you see these people coming back just yet, or it takes a little bit more time?
No, not at all. So let me just boot this guy up. I love this chart, and if you don't have a tier 3 glass, now, which granted very few do. In fact, let me just do this properly. You can do the same analysis with active addresses, which, it's funny actually. I was thinking about a good on-chain joke, what you could put on a mug, right? I only trade with active addresses with the one I came up with because it's such a primitive and basic, simple metric. But at the same time, it's got so much signal in there. And you can see 2017. This is just the most beautiful bull run we've ever seen. I don't think we'll ever see it again in any asset. This was just pure textbook. I bought here, so I never got to see this side of it. I only got to saw this bit. But you can see how people got absolutely flushed out. And note how long it took. We didn't even get close to recovering for a very long time. 2019 was a blip, but then we pulled back down, and this is a bear. You can see the bear market activity with a very slight, maybe it's over, but not really. You can then see the 2020, 21 following the March 2020 sell-off. This is a bull, right? They stand out like a sore thumb. Now, the degree of collapse is very, very reminiscent of 2017. And here we are, we had our 2019 moment and we've really pulled back. So in many ways, when I look at this, there's no retail. And I find it almost humorous. In fact, it is humorous on Twitter when everyone's like, all we need is retail. It's like, no, when retail's here, you need to be getting out. That's the exit signal. That's this. So when I see a very stable base, and you can see that this is quite stable, there's only the hodlers that remain, and the hodlers have now put in a floor not at 29K, but at 33K, right? There was not enough sell side to break through the hodlers, and simultaneously there was enough hodlers to put a floor in, even with all of the headwinds that we have in play. Now, can that reverse? Absolutely. But at the moment, I'm seeing a stable group of people who are here, rain, hail, or shine. They're not going anywhere. They've seen all of this volatility, and they just don't care. And they were sufficient to put a bid in, and simultaneously there wasn't enough sell side. So it's this kind of double-edged, well, maybe max pain is actually to the upside because there is no retail and they're going to want to come back eventually.
I think too, with all the headwinds and all the conflict that's going on in the world right now, Bitcoin now breaking away from other assets, the stock market, gold, et cetera, et cetera, et cetera. Bitcoin is actually becoming a safe haven. Yeah. As the most volatile asset, it's actually becoming a more safe haven than stocks or gold. And I know you did a write-up recently on the macro, as you mentioned, you were looking at some other macro assets. What are you seeing in terms of people actually rotating into Bitcoin now instead of perhaps where they would have gone in the past, something like gold or maybe stocks at a pinch? But
no, it's a good question. And one angle to this is we had Peter Schiff being like, look, gold's only down. Gold held up very well during the breakout of war. I think it actually traded up slightly, a couple of dollars, which is like, thumbs up. But he's sledging and saying, look, Bitcoin's down, everything's down. And then just like March 2020, we had Bitcoin recover and regain that price at a far, far more rapid rate. Dylan Leclerc had a good tweet recently where he showed the NASDAQ versus Bitcoin and how Bitcoin just has completely obliterated post the announcement on Wednesday night of Russia's invasion. You essentially see Bitcoin trade down the most, but then recover the most in a very, very strong way. So, even just on a technical analyst basis, if we zoom in here, this is a higher low to here, and we've now got this second higher low. And if we can break up into this could be a bear flag. But if we can punch and get some actual volume and push this thing forward, then Bitcoin's essentially created a reversal of what is a very fundamentally sound basis, right? Across many technical metrics. The one that comes to mind is dormancy flow. Hang on. basically off a great many undervalued valued zones, whether it's the Mayer multiple, whether it's dormancy flow. You can look at this guy on the big picture, whether it's reserve risk. There's many metrics where we're essentially down in this undervalued zone. The other one that I've been looking at is the NVT price. And that's basically showing that the amount of volume flowing through the chain is significant relative to where we currently are in terms of pricing. So it's almost like a confluence of hodlers putting the floor in, undervaluation metrics, just simple things being too oversold all at the same time and then outperforming. It's almost like the narrative writes itself, but in many ways, I think the hodlers are writing the narrative, and the narrative is just late to catch up to the party.
Mm. Yeah, that's really good. I want to slightly shift gears, Checkmate, in terms of what Bitcoin's currently being used for, in your opinion. So we've seen Ukraine recently receive, I think it was $20-30 million in donations. And, some of the Russian people with the ruble BTC pair, a lot of local Russian people are moving their cash into Bitcoin. Do you foresee Bitcoin's currency value of the asset becoming more utilized in the foreseeable future versus the store of wealth?
It's an interesting question. I'm not buying into the Russian oligarchs and everyone rolling into Bitcoin. I'm actually not seeing that. What I actually think is going on, and the reason why I think Bitcoin and gold are trading in the same way, up, in my view, is actually more towards the Luke Gromen moment, which is where he's basically been saying that the world has now discovered that the US Treasury is no longer the safe haven. And the question is, what is the safe haven? If it's not US Treasuries, what on earth could it possibly be? And when you actually think about it, the US Treasury is essentially someone's debt, someone's liability. You require the United States government to honor that debt. Now, highest probability is that they will, but they're not doing it for Russia. So that's the kind of dynamic. If you find yourself on the wrong side of the United States, then you essentially don't have a neutral reserve asset. So this is where gold and Bitcoin come into the mix. And it is in many ways why I think that Bitcoin continues to stand. I mean, it remains number one in the crypto space, despite every innovation that's ever happened, every NFT, every DeFi, every coin, every token. It remains unbeaten. And the reason for that is its true neutrality as a reserve asset. It's that scarce hard cap, and it's the fact that it is nobody's liability. It's not evolving. It doesn't have to change. All it has to do is survive. Bitcoin's job is to not die. And as a result of that, you see more and more people being like, it's just the only thing that makes sense to me right now. And I was even thinking, you mentioned I'm in Mexico at the moment, as bullish as I am on gold, right? Because Russia has a lot of gold, and Luke's argument is that all they have to do is revalue the gold to oil pair. We will sell you X amount of oil, which the world is massively short, at whatever price you want in terms of gold, right? A massive arbitrage. You send us your gold, we'll send you your oil. And what that will do is essentially blow out the gold suppression scheme, right? This massive short that banks have been doing for decades and decades. Everyone is short gold. And likewise, a great portion of the world is short Bitcoin, because the best weapon against Russia weaponizing gold is actually the United States weaponizing Bitcoin. So you've got this, this is some seriously nation state gameplay. My view is that Bitcoin is quite some distance from medium of exchange. And I would argue that the only way it's going to get there is through what Jack Mallers is doing with Lightning Network and Strike and things like that, which is actually using Bitcoin as a rails, not an asset. It's transferring dollars into Bitcoin, swap it to the other side of the world, swap it into another currency, fiat to fiat. End user doesn't even need to know Bitcoin was there. But, my view, I would love to buy gold, but how do I transport that? Do I put it in my luggage? Because if I get to the airport, they can take it away from me. They cannot take my Bitcoin. That's what I think is so powerful about this. Bitcoin is that neutral asset. It is arguably the only one that compete against gold in that store of value, and that is simply because it just isn't changing. It just has to survive, and that's its job. And if people need to flee their country, they need to move. You stick 12 numbers in your head, 12 words in your head, and you're good to go. Gold can still be taken off you. So there's trade-offs, but they are the two assets that have nobody's liability attached to them, and that's why I think they're so powerful. And
it's much heavier to carry around gold bags than it is Bitcoin bags.
That's the grayscale, right? Drop gold.
Also, just on that, in terms of the nation state and anti and for Bitcoin narrative. We saw Elizabeth Warren again come out recently. I think it was on Tuesday. With her anti-crypto Bitcoin narrative. What's your take on US senators? It's not really my I'm not an expert in that field at all. I'm not sure if you spent too much time thinking about it, but like in terms of some of these higher up individuals, government people in the US predominantly that continue just to like push out FUD, continue to try and kick Bitcoin. What is their agenda? You know what I mean? Like I don't get it.
Yeah, it's very interesting, and unfortunately, it's trending down the path of being a partisan issue, which is not a great outcome. However, in many ways, I almost can't see it happening any other way. Elizabeth Warren she has a particular type. She has her cohort, very environmentally savvy and all the rest of it. Quite sensitive about the environment. But if you were to suggest even fleetingly that perhaps we might need to burn quite a bit of oil in order to keep people fed, warm, to get to whatever green future we think. I mean, I'm an engineer background. It takes a lot of oil to mine the copper, to mine the lithium, to mine the steel, to install it, to pour the concrete. All of these things are going to require, unfortunately, a lot of oil. And we've stopped investing in oil infrastructure for a very, very long time. So the world is massively short oil on that front. But if you said that to an Elizabeth Warren type, she will tell you that you're a heathen and you want to burn the planet down, right? There's that mug with Nick Carter on it, right? Libertarian nerds trying to burn down the planet. The unfortunate reality is that she has her stakeholders. You probably went through the same as me. I was told about the environment being, so quintessential very early in school. And it's only now, I recommended following Doomberg in that last piece. Again, strong recommend there. Just as much as we may want to save the planet, we also have to face reality. And the reality of that situation is that energy usage is what has, oil in particular, has lifted more people out of poverty than any other technology in the history of mankind. Now, to turn that off is going to reverse that problem, right? You're going to actually reverse that problem unless you have the alternatives built, which we absolutely do not. So it's kind of this world of narrative and reality. And unfortunately, politicians like Elizabeth Warren and many in her camp are just so divorced from reality. And it's fair. It's a big problem. No one's across all these macro big picture things, but I still question why a 30-year-old who just studies stuff on Twitter, how do I have more of an understanding of this than some of these senators? And the unfortunate reality is that they have investors, they have stakeholders, and their financial interests benefit a particular direction. Media has a particular agenda, it benefits their direction. And things like that, it's clickbait. And these short headlines get people to click on it. And unless people go through the third, fourth, fifth magnitude of thinking, which very few do, it's easy to click and say, yeah, I hate Bitcoin because of this. But then you look at what it's doing in the Texas grid. You look at how it's actually transforming energy. When you really, really do the hard work and you think about it, proof of work is going to probably be one of the best things that's ever happened to the green renewable push. It makes it feasible. It consumes baseload power. It allows for load balancing. That's a whole angle of Bitcoin that is massively underappreciated. The crypto space massively underappreciates it. I see a lot of hate against proof of work from Ethereum maxis and the like. They simply haven't done their homework. I'd love it if they did, because you get some very, very fruitful discussions. But I think that's just the crux of it. People have stakeholders. They're stuck in the narrative they've been told. And it takes a lot of work to undo that. It's much easier to put out FUD than to dispel it.
And I think the takeaway there for newcomers in the space is follow people who you trust. Always think about things. Put it through a sifter. Don't believe everything you read. Don't read headlines. All the basic stuff that, again, I see people, a number of people that bought into December and sold in February because they chased the hype and then sold in panic because they saw, the latest country banning crypto. It just happens time and time again. Checkmate, you mentioned Ethereum. Just quickly, I'd love to get your thoughts on, I know you wrote a post for members recently just around the interest in Ethereum. I think we were looking at like active addresses as well as also social sentiment on Ethereum completely fell off a cliff. What are you seeing now on Bitcoin, not necessarily versus Ethereum, but just generally Ethereum and any other sort of altcoins that you're seeing? I just another quick thing I saw today, the NFT trends on Google, it's completely fallen off a cliff. I think we spoke about this last month. We thought there was probably a local top there. I'm interested to see and think about where that capital, that attention, that focus is going to go. Is he going to stay in NFTs, or is he going to come back across to some of the lower cap assets?
Yeah, and I think I touched on this some time back where I can't remember exactly where it was, but it was probably when we were starting, maybe the January period. My view is that we entered a bear market back in May. That's my core view, and that's based simply on that active address chart, right? I don't see anything else that I need to see for that to happen. Now, that rally we had from July through to October or November, as powerful as it was, there was no follow through, and hence we have the famed double top. Now, as we then pull back, you have to say it looks like a bear market, even though it's a funny looking bear market. It's going sideways, but my view is that we do need to flush out a lot of the altcoin space, and we can see in the Ethereum chart, we didn't even get close to the activity high. So it's the same as what we saw in Bitcoin. It continues to languish. Ethereum is, for better or worse, an economic asset. It has clearly struggled with its gas fees this year, and unfortunately, the reality is you just can't onboard new people when your gas fees are that high. It's just a reality of the situation. So they are constrained in growth until they roll out the next phase. And quite honestly, when you look at, Ethereum's going to have staking, well, it's like, well, Solana has staking, and I can do it right now. So to the average person, jumping into any L1 is kind of all you need to see. We can see our transfer volume is declining quite significantly. I mentioned this, DeFi, it just has to make you sad. I just can't see any life here. People aren't buying the token, they're not moving things around. And it's kind of somewhat ironic that, the only trading activity is on centralized exchanges because people can't afford to use Ethereum. So the challenge that I think Ethereum in particular is facing, I'm a big advocate for Ethereum staying proof of work, right? I think that by Ethereum staying proof of work, they differentiate themselves. And why? Because proof of work is credibly neutral. Once you go proof of stake, it's subjective. Because suddenly, we hear about this concept of what happens if too many people get a hold of too much share of the coin, and they say, we'll just fork the attacker. It's like, well, who forks the attacker? Who's making this decision? What is this, a Reddit post? It's a very subjective problem. And the unfortunate reality is people are going to go, what does Vitalik want to do? What does the Ethereum Foundation want to do? They have to look for leaders. And to argue against that, in my view, is saying that people don't look to leaders, which I think is just factually wrong. So the challenge is that Ethereum is entering a proof of stake world where there's 20 proof of stake chains that currently work, arguably are equally as decentralized, especially in the eye of retail. Retail do not care. They just want a thing that goes quickly and doesn't cost them much. So Ethereum's done themselves a disservice, in my view, moving to proof of stake. Obviously, many Ethereans will disagree with me on that, but staying proof of work, in my view, would be the ultimate differentiator because you maintain the credibly neutral base layer and then you scale up, right? Do all your roll-ups and all that kind of funny stuff. But, at the end of the day, Ethereum is putting itself against all the other L1s. And I would argue that the moat and the network effect, particularly with the gas fees, we're seeing Aave move to Phantom and, other chains. They're not bound to roll-ups. They're not bound to Ethereum. And in fact, by creating a token in a DAO, if you were a company shareholder and your company said, we have the option to go and expand over to Europe or over to Africa or Australia, but we're choosing not to because we're Australia maximalists. I'm sorry, but you're going to get outcompete. So the DAO is actually incentivized by creating all of these tokens. They've incentivized their shareholders to go over to Aave and Phantom and Avalanche and Solana. Go and generate revenue in every country, anywhere that there's users. So in many ways, Ethereum has diluted its value proposition. It's diluted its user base. It has struggled to scale. It's got technical debt coming out the wazoo. It's a challenging situation. And unfortunately, by going proof of stake, there's lots of proof of stake systems, and I see lots of Ethereum maxis say that, but Ethereum's going to be the right proof of stake. None of the other ones do proof of stake properly. Where have we heard this before, right? What is the right proof of stake? The reality is that they've already got the model, scale in layers the same way that Bitcoin has been doing, and you will in fact differentiate yourself, but you must get the scaling going. And it's a really tough slog. I'm not constructive on Ethereum, to be honest, simply because I don't think the moat on devs, users, or apps exists, and I think that that's massively mispriced at the moment, which is it's tough. It is tough.
Do you think we'll see another L1 blockchain overtake Ethereum in the next 3 years?
I think it'll be a competition. Look, I don't know if it'll overtake. I think if Ethereum doesn't fix its gas fees, and if Ethereum 2.0, because here's the actual reality that I'm not sure many people understand. Ethereum 2.0 with smart contracts is 5 years away. It's a long way away. They're only just merging the consensus model. We're not even close to Ethereum 2.0 in its full form. Where is Solana going to be in 5 years? Where's Avalanche going to be in 5 years? I don't know, but as centralized as they may be, they are building up. And the other side to this equation is a lot of the stuff that these chains host is centralized. We can look at these things and go, they've got a token and a DAO and I vote and things, but realistically, if the core team disappeared, it's done, right? So it's a centralized system. Security tokens, good example, or stable coins. We're hosting a centralized entity. Tether regularly cooperates with law enforcement, right? They're willing to freeze coins and move them around. So if you have a centralized stuff built on top, does it matter if the base layer is a little bit less decentralized? Absolutely not. It just doesn't, because the top layer that you're supporting is centralized anyway. So in many ways, the question is, does it even need to be as decentralized as it is? You could argue that, what we're seeing in the nation states is kind of saying, well, yes, it does need to be, but it's a really challenging thing. There's so much competition. I think that the cumulative value of L1s will probably continue to grow. I think Ethereum's market share will continue to decline. And I think it'll probably end up being a competition. There'll be relatively even market share. Whether they flip each other, I don't know. But I'm not bullish on Ethereum holding number 2 spot is the core, unless they absolutely kill it and deliver 2.0, and it really is the panacea that they believe it is. I'm not convinced, and simply by track record, it's failed to be what it has said it's going to be for a very long time. So they are fighting an uphill battle, that is for sure.
Yeah, awesome. Okay, that's been good. Thank you, Checkmate. Final closing thoughts. What would your take be on any bearish folks out there that are bearish on Bitcoin?
That's a great point, actually. So, I mean, look, at the core of what is going on with Bitcoin, in fact, let me just pull up a very specific chart. Where is it? The number one metric that I think is telling the story is this one right here. Let me zoom in on a 5-year. So you may have heard me talk about long-term holder supply. Now, this is a spending heuristic. Basically, however, once a coin reaches about 5 months, it's the least likely to spend. It's less than 1% probability it gets spent on any one day, and that continues to decay in an exponential manner. Now, what we generally see is in a bull, people sell, right? The smart money sells, and you can see that they sell the exact top. They stop selling, and then they return back into accumulation. And this bear market can last for some time. Right, people kind of just hang on to their coins. Now, what we saw here is that whenever we return back to an all-time high, right? This is the previous all-time high, 20,000. Long-term holders start cashing out. And you can see that our supply here, to put in the top here, was much higher than we had here. So way more coins were not spent. Now, you could argue we didn't have the demand there, right? So that's a case. But they've recovered. We pulled back to all-time high. They started spending, but there wasn't enough market strength, and they stopped. So my argument for all the bears is we've now put in a bottom that we've seen with the active addresses is just hodlers. There's no retail, there's no hype. This is hodlers and institutions that get it. And the same institutions that got it back here in March 2020 are sitting down here at 30,000 buying at the lows here. Now, what is going to happen when these people who got to 60,000, 70,000 started selling a little bit and then stopped, had another 50% correction? What is the price that hodler is going to charge the market for going through another 12 months of pain? I think it's going to be 80,000 or 100,000. So my view is that we're about to see a whole lot of supply not only enter long-term holder supply. I expect that within 2 months, this thing will be rocketing higher again based on hodl waves and things like that. We've put in a floor after everything but nuclear war. It's only the hodlers that were there. No one sold during that news. So where are the sellers? And I bet you they're going to charge a premium for having to go through another 3 months, 4 months of downside and another 50% correction. My view is they're going to mark up the price when they start selling to probably 80K or 100K. So I guess my argument to the bears is, who's left to sell?
That's a mic drop, mate. I think we'll leave it there.
Who's
that is
selling?
an unbelievable chart. If you're not watching this on video, you need to jump on and just check out this chart. That is, can you just read out that chart there, Checkmate? What do we got? The total supply held by long-term holders on Glassnode.
So
Unbelievable, really.
It's currently sitting at 13.3 million coins out of 18.9. So it's a seriously significant amount. Wow. And if we just flip the script, let's go just to close on this. If we go short-term holder supply,
just to make it really clear there. So what we're saying is we've nearly got 65 to 70% of total coins held by wallets longer than 5 months. Yeah, are not selling.
Exactly. And this is their counterpart, the short-term holders. And just for reference, circulating supply is equal to long-term plus short-term plus exchanges. So both of those metrics exclude exchange balances, which is also in a downtrend. But what we can see here is our short-term holders. These are people who bought their coins recently. They're the most risk-averse. They're the most scared. Red candle, get me out of here. And you can see that they own the maximum supply at the tops. They own the maximum supply at the tops. Weak hands literally own everything.
Wow.
And here we are. I mean, it's not all-time lows, but we're talking about lows relative to, it's nothing. So in terms of the amount of supply that's highly volatile and ready to be sold, it's just not there. It's a bit of inside baseball. Dave Puhle and I are currently working on a paper that's looking at how much of relative to issuance, right? Issuance is 2%. How much are the long-term holders consuming as a multiple of that? And it's it's like 12.5 times. So the amount of coins being mined every day, long-term holders are currently consuming 12.5 times more than is being issued to miners. And miners in the United States have mandates to not sell. So we basically just had another halving, and long-term holders are buying 12 times more coins than are coming onto the market. Where's the supply come from?
And for those of you that have checked out the chart as well, so what this chart is showing is basically pretty much what looks for 75-85% of the total number of short-term holders that bought back in November, December have basically sold. Am I right in saying that? Yeah.
Yep.
Wow.
Completely flushed out. So it's interesting dynamics.
Yeah.
HODL'er dynamics are strong, and I think I like to think about Bitcoin as a living organism, and it simply all of the pieces and the people and everyone who's interacting with it, just there's no one left who's scared, because they've hodled through 50% corrections, the breakout of war, $110 oil, what looks to be a yield curve inversion. I mean, Canada seizing people's money. How much more FUD do we need? Until Tether blows up, that's the last thing. But even then, everyone's aware that Tether's going to blow up eventually. I don't think they're going to flee from that instance. So I'm not sure what's left.
I was going to say, I don't think there is anything left, is probably more to the point. So that's been amazing, mate. Thank you very much. If you want more of Checkmate's analysis, you can jump over to Collective Shift and sign up for a 14-day free trial, as well as he posts a bunch of stuff on Twitter and Glassnode. You can check all that out. Thank you very much, mate, for finding the time. I know you're enjoying it in Mexico. A little bit jealous.
No, it's a pleasure, mate. Always good to be here.
And I think we're both heading over to the Miami Bitcoin 2022 conference. So if you're around, we'd love to catch up for a beer or whatever you drink in Miami. A cocktail. Cool, mate. Chat soon.
Thanks, guys. Cheers.